Hello and welcome to Election and Markets. If I had a time machine and if I had ability to take the clock back to 2014 and really talk about what India was, where per capita was, where roads were, how long the lines were outside toll road, what kind of public and digital infrastructure we have, well, it's a polite reminder of where India was and how much has changed. From fragile 5 to top 5, from being one of the biggest stock market in terms of market cap in the world now, record inflows by domestic institutional investors, comeback of the banking sector, new resilience in the PSU sector, and new themes like EV, energy transition, and manufacturing. So India of today is strikingly different from India of last decade. But India of tomorrow, how different would that be? Markets always tend to get curious ahead of elections. Markets want continuity. If we get continuity, what should we expect in terms of what is called as India key decade? Now, to discuss all that and much more, it's my real privilege to have Mr. Neelkanth Mishra of Axis Bank on ET now. Now, he needs no introduction whatsoever, but I can assure you that this is one interaction I always look forward to because I learn a lot from him. And I'm sure viewers would also like to learn a lot from him. Good morning, जी. कैसे हैं आप? Long time.
बहुत बढ़िया, Nikunj. Thank you very much for inviting me again to your show. I also love our interaction, so look forward to the conversation.
India of yesterday, India of today, and India of tomorrow. Where should we start with? गया कल, आज या आने वाला कल?
I think even to understand where we are headed, we need to have some handle on where we've come from. And what we have done and where the platform of has been set for the growth in the next 3 to 5 years. And then, of course, the work that we do in the next 3 to 5 years will set the stage for what happens in the 5 years after that.
Okay, so let's understand the monumental changes which, to your mind, which have happened in last 10 days. We all talk about digital infrastructure, better roads, more electricity, power 24/7. What, to your mind, are the 2 or 3 biggest changes which, in a sense, have impacted both productivity and India's growth?
I think the most important is the change in aspiration. Remember, for individuals, for groups of people, for companies, unless you aspire, unless you believe in yourself, you will not even try to do things. And I think what has changed quite remarkably in the last 10 years is the change in aspiration. And the second most important is that the machinery has been set in motion. There is, the parameters under which the policymakers work have been established. So, for example, the focus on macroeconomic stability, the government moving from a role of a doer. Of course, they're doing a lot of things on infrastructure where they must, but also on the private sector side to see themselves more as a facilitator and seeing the private sector as a partner. And at the same time, trying to stay as far away as possible from crony capitalism. And therefore, focusing on macroeconomic stability, giving visibility of a reasonable growth, steady inflation, steady exchange rates, steady interest rates. And then that is great. That's a great conducive environment for the private sector to start investing. And that also has changed. So from being a country where there was a big ask in terms of changes so that we could get included in the global bond indices, to a period where the bond index investors asked the index provider to include India despite not getting the tax exemptions that they wanted, I think is a big change. And I would say the third is the governance infrastructure itself is much more attuned to believing in markets, that markets work, that market forces work, that there are certain characteristics which get rewarded in the institutional system. So building, so like if you're a 35, 40-year-old civil servant today, the parameters on which you are judging yourself, on the parameters on which you think you will be judged as you are evaluated for senior positions, that has also changed quite meaningfully in the last 10 years. So over and above all the things you mentioned, right, that resetting of expectations on what we can do to infrastructure. Can we do 5 lakh crores of capex in railways every year productively? Can we build 15,000-20,000 kilometers of national highways every year? Can we have such a large increase in airports? Can we have the government connect with individuals in a leakage-free way or a minimized leakage way? I mean, they can never be, very hard to have zero leakage, but I think all of those things are well documented, but I think these 3 parameters are also very, very important as we think about the next 10 years.
One hallmark of the current regime is that they have, like you said, they've stopped leakages and they've spent a lot on infrastructure. And you can feel the change from roads to ports to highways to internet connectivity. Everything now seems to be just galloping. Do you think that this entire infrastructure boom, which has kick-started last couple of years ago, is real, and this is like a long cycle which will extend itself for multiple years?
It will, but we need to keep resetting our aspirations. As I said, the turn in the real estate cycle, frankly, the downturn in real estate that we saw after 2012 was a very important part of the slowdown in the economy, where trend growth expectations slowed from 8 to 6.5%, to a large extent because of the slowdown in the real estate cycle. So the fact that the real estate cycle has turned, the fact that we actually have built a significant amount of road and rail infrastructure, airports are running, port capacities have expanded, power is available. So I think all of those changes are good and progressive. But as we think about what should be our work for the next 5 years so that the 3-5 years after that can also see similar growth, I think our priority has to be urbanization, and a significant amount of effort is needed in making sure that adequate funding is reaching the city governments as they build urban infrastructure. So if you think, for example, the Mumbai real estate market, the fact that, again, stamp duty collections have hit a new record, I think is partly because it was a 10-year downturn and finally, incomes have grown faster than real estate prices and real estate is more affordable than it was. So that's obviously a very important starting point. But at the same time, if you did not have visibility of the metro rail commissioning, if you did not have visibility of the coastal road significantly reducing transit times, if you did not have the visibility of the Atal Setu connecting completely open virgin landmass for development and for residential areas, you would not have seen the expectation that, or you would not have had the expectation that the real estate market in Mumbai can keep expanding. Now, how many cities in India are really doing that? Can we do that in the top 500 cities in India in a scalable way? Can we continue building this infrastructure in a dynamic way so that the real estate cycle doesn't fizzle out in the next 3 to 5 years because prices start going up too fast because supply cannot cope up? And so as we think about the areas of work, I think this should be a very major area of work. The second major area of work has to be, again, a further change in the way I think government works, where what we are seeing in a very solid way is the return of industrial policy globally. We have published research where China, in the last 2 years, as it has shifted investments away from real estate to industrial capacity, $1.5-2 trillion of additional loans have gone to for industrial capacity setup. And this is just the start, right? So in the next 3 to 5 years, in this same style, we could see very aggressive capex and industrial policy coming in from China. And the return on assets, on capital-intensive assets in China is already back to 2002 levels. It's quite possible it keeps falling. And imagine then what other countries have to do. So are our policies in place to counter that efficiently? We don't need to get overly protectionist, but at the same time, we need to be very agile in responding to this. Is our government structured in terms of organizational structure? Is it ready for this type of a global economy, which is very different from what we saw from the early 90s to say around 2015-16? So there are several new challenges that we need to cope up with. We also need to, and that's the last point I'll make on this one, the path that you take both of us have kids the same age. I mean, the way kids go from 0 to 12, 13 is different from what the kids need from 13 to 18. And then after that, of course, they're kind of on their own. But similarly for the economies, as you go from low income to middle income, there is a certain path. There is a certain economic model which is most productive. But as you start thinking about how to go from middle income to upper income, the business models, the economic models need to be very different. So you need to become much more research focused. You need to have risk capital flowing in through the system. Companies need to be doing a lot of R&D. The government needs to improve the quality of regulation. The government needs to improve investments in pre-commercial R&D. So there's a lot of work that needs to be done so that the future path of growth is also cleared up and we can sustain this momentum over the next 20-25 years.
Okay, let's connect markets and the economy. If one looks at, let's say, Modi 1.0, it was more like repair which was at play. Banks had to be fixed, power sector had to be fixed, leakages had to be unplugged again. Then Modi 2.0, where government infrastructure spending was large in railways, in ports, in the power sector. How do you think Modi 3.0 would be different? What do you think would be the standout feature of next 5 years?
Frankly, here one needs to be a bit prescriptive in the sense that we don't really know what the government is going to do. So what you can at this stage be a bit prescriptive and kind of lay down a wish list. And I think there are several changes that perhaps are necessary. So for example, say GST is now settling down and we saw a record month. The effort should be to simplify the GST structure further. There are anyway some changes needed because of the compensation cess. The need for that is not there, so that has to be somehow structured into the regular GST. But as we think of that, why not bring it down to 2 rates or 1 rate of GST? And that will be a bit disruptive for the economy for a few quarters, but I think in the longer term, it will be much better. I think there are a lot of changes that perhaps are needed to direct taxes because tax compliance in India is improving. Tax to GDP ratios for personal income tax were rising at 5 basis points a year from 2000 to 2018-19, and then since then by 20 basis points a year. But there is scope for it to increase further. I mean, the pace at which we sign advanced pricing agreements for corporate taxes, if not track foreign firms, if India as an economy has to open up further, I think all of those changes need to be made. In addition to some of the things I mentioned in response to your previous question, which were how do we speed up in urbanization so that we can sustain growth in providing good quality housing to all Indians? How do we manage the transition towards making India a product nation? How do we make India a hub of innovation? And at the same time, cope with the industrial policy changes that are happening the world over so that our policies and our governance infrastructure is capable of responding rapidly and then quickly to some of the changes that are happening globally.
We all understand the word EMI, but let me use it from a market standpoint. E stands for energy transition, M stands for manufacturing, I stands for infra. These are the themes markets are clearly excited about. So from a market standpoint, which theme to your mind is going to become big to mega, and where to your standpoint stock prices are not pricing in already 3-4 years of future growth?
I would say that energy is a big problem area for us, right? And it will be for the next several decades. We are trying to do what very few countries have done, which is grow from low income to upper income without controlling our own sources of energy. So we're not, other than renewable energy, which frankly, we have a lot of. We have a lot of sunlight. We have a decent amount of wind. We should be doing a lot more, and we are. But at the same time, not every type of energy consumption can be converted into electricity, and not very quickly anyway. So energy is going to be a huge challenge for us, and therefore a big opportunity for entrepreneurs and businesses, and therefore for market investors as well. I think the second is just construction. So while I think on the real estate side, I'm very constructive. I think the real estate cycle has already been on for the last 2 years or so, and my sense is when these cycles turn, they don't end very quickly. So what we've seen so far is a sharp increase in sales, but I think construction needs to pick up going forward. And therefore, we are very bullish on the inputs to construction. Some are late cycle construction, so the cables and wires and the paints and the furniture would come in later, maybe sanitary ware as well. But in the cycle that is yet to play out, and the natural inclination to start buying real estate stocks because real estate is going to do well, I think has some flaws, because most companies have limitations in how fast they can execute. And in fact, you would reward companies that are being careful and relying to only take on as much as they can execute and not try to expand too fast. But so on the real estate stocks themselves, I'm not sure if there is yet more upside. But on things that go into construction, yeah, those things can scale up faster, and there I would be a lot more constructive.
What role do you think global economy would play in this perfect Indian scenario?
There are three ways in which three major ways, of course. As India grows, we need to much deeper interconnections, and we will end up having much deeper interconnections. As you grow bigger, you necessarily have to become more integrated with the global economy. So it'll be very hard to make it more internal. The good thing is that if our real estate cycle is turning up, the world's real estate cycle is stumbling, then growth should be better in India than abroad. But the three main linkages are one on the capital account side. So at some point, and you saw the Fed overnight bring down the pace of quantitative tightening, it was better than what the street was expecting, which is why financial conditions have actually eased. So instead of saying $30 billion reduction, we talked about $35 billion in quantitative tightening. But at some point, I think the Fed will have to start doing QE. And we are very worried about US fisc, the US fiscal deficit being out of control. And therefore, someone has to go and buy those bonds as the incessant borrowing continues by the US federal government. And eventually, it'll have to be the Federal Reserve. And so if of the two contestants for US presidency, one of them who's the front runner right now, was to come in, it is very likely that we head in for a weak dollar policy. And what we could see is inflation staying much higher. And therefore, it is quite possible that with a lag, Indian bonds would become very attractive. And right now, everyone is looking at how much can be purchased through because of the inclusion in the benchmarks. But guess what? I mean, there are several $100 billion of fully accessible route bonds which are now available. And for most foreign investors, India, given its focus on fiscal discipline, very visible, very predictable growth over the next 4 to 5 years, reasonably stable currency, the bonds can be actually very attractive. And then it is possible that the central bank then struggles to retain control of the monetary policy. But anyway, that's for later. So as we think about the next 2 to 5 years, these are challenges that could emerge. At this stage, I think the problem is of dollar shortages and higher rates, and therefore the risks are the reverse. But the moment the Fed restarts QE, I think the problems will become will turn to be on the other side.
All right, there you have it. That's the word coming in from Neelkanth.
If you like this video, then like, share and subscribe to ET Now.